Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me for our Singapore FinTech Festival virtual coverage is Dan Liebau, founder of Lightbulb Capital, to discuss security token offerings and the evolution towards native digital securities. Dan, it's great to meet you virtually. Welcome to Trade Talks.
Thank you so much for having me. It's great to be with you today.
And Dan, can you briefly introduce yourself and share what triggered your interest in blockchain?
Sure. So as you said, I run a company called Lightbulb Capital. So that's a company that really focuses on research, education, and advisory in the space of innovation in finance. And I worked in traditional finance, in financial markets technology, about 15 years before I started the company. And so I got to see all of this evolution around electronic trading and so on. And that always kept me very excited. So when blockchain came about, I thought, wow, this really has the potential to be the next level financial market infrastructure. So since I knew a little bit about electronic markets, I started digging into the opportunities that blockchain really can offer to us. And I think that started about 4 years ago. So yeah, I'm knee deep into the whole thing. Very, very interesting.
And Dan, for the benefit of myself and the Trade Talks audience, what are security token offerings and how are they different from initial coin offerings in your point of view?
Sure. And thank you for that question. It's excellent timing, right? I think just in November, SEC Chairman Jay Clayton said that all stocks could eventually become blockchain tokens. So that's kind of very encouraging at the end of 2020. But as a bit of a background, so over the last 8 months or so, I've been researching security tokens very specifically together with my co-authors, Thomas Lambert and Peter Rosenboom of Rotterdam School of Management at the Erasmus University. And basically, we looked at security token offerings from an entrepreneurial finance perspective. And the idea was really to define what STOs and ICOs are with the purpose in mind. Okay, why are they actually being issued? And that's where a very clear difference becomes very apparent. So if you look at what an ICO is, it's really a consumptive right to consume a product or a service. And therefore, the primary purpose of an ICO or a utility token is actually to be spent, okay? But if we look at security token offerings, it looks very different. So security tokens are really issued as an investment product. And therefore, the purpose of a security token for the company is really to finance the firm. And then on the other side, you have the investors. They buy it with an expectation of profit. So you can see that those two are very, very, very separate. Also, I would add, and forgive me, I'm not an accountant, but ICOs really would need to be recorded as revenue on your income statement, right? Because it's something that that is basically representative of your product. But STOs would really sit on the right-hand side of your balance sheet, maybe under equity or long-term liabilities. So you can see how these two are very different actually from each other.
And Dan, can you share some of the key insights that you have identified during your recent studies on the primary markets of security token offerings?
Sure, thank you. So first point is that STO markets really developed after the ICO bubble imploded around the end of 2018. What we're dealing with here is really a nascent market. One of the typical things for nascent markets is that many people try and many fail. So no different in the STO market. I think about 60% of the offerings that we looked at in our study actually did not manage to raise any capital. But at the same time, we see very interesting developments. So for example, there's a very big offering, a company called T0 that is trying to build a security token exchange or has gone live since. They raised $134 million. So there's entrepreneurial activity, but you also have institutional activity, which is quite exciting. So for example, one of the observations in our data set is Societe Generale that issued a $100 million bond on blockchain. And maybe not part of our paper, but if you look at the activity that is happening right now, we can see more and more institutions and startups trying to issue securities of all sorts of different types as we go. Another insight is a security token is not a security token. What I mean by that is we have all sorts of different types. So you have debt, you have equity, you have funds that are being tokenized. We also found a large proportion of observations that are what we call income share tokens. So these are tokens that promise a participation on perhaps sale or net revenue, which is a little bit more innovative type of an investment product. What else? So we also realized security token issuers like jurisdictions where there's accommodating securities laws. Yeah, so that's something that is also quite normal when you deal with emerging type of technologies. People will go where regulation allows for people to operate properly.
And Dan, I think the income part of what you said is certainly interesting, something we can follow up on. But in the last minute here, I want to get your point of view. What's the future of securities on blockchain going to look like moving forward?
Okay, so the future is really what we call native digital securities. And native digital securities differ from STOs because STOs are mere representations of a security on a blockchain, where a native digital security will actually be the primary record of a security on blockchain. So the record on blockchain will basically supersede any other records, right? And that is quite an exciting development. Some of the jurisdictions already accommodate for that. So Liechtenstein, I think, is one of them, but we will see other ones follow suit. So that's exciting. The last thing, perhaps, that we have to acknowledge that all of this doesn't come without challenges, right? So technology platforms like Ethereum, for example, have this issue of fork risk. In financial markets, we always worry about finality. So that's a big issue that we have to deal with as well. And then finally, there's also a lack of a language to describe separate or distinct securities features, right? So that's also something that's being worked on. And I think platforms like, for example, Tezos or Zilliqa or Polychain, which is launching, I think, next year, will be in that space and put something interesting on the table.
All right, Dan, I look forward to having you back on the show. It sounds like there's a lot of great things on the horizon. Thanks for joining me on Trade Talks, and thanks for joining us. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.